Okay, guys, we're not going to put out a full update today, just a quick hitting flash update considering where we are in the bond market. We've been anticipating this obviously for weeks now. Now that we're finally here, what's the price action in the market and what's it telling us? Well, if you're looking at commodities, you're probably seeing a lot of red, right? This is going as expected. We've been anticipating this. We've been saving cash for this. This is what we want. We're not afraid, right? We're not selling, we're holding because we knew this was coming, right? All the way down to uranium, same thing. It's all red across the board. Good. What is a bit of a surprise so far is that the broad market is green. However, I think this is going to be short-lived. Looking at the Dow Jones, we've got pretty low volume. Look at this volume bar right here. I mean, it is nothing. It is nothing. You're talking about turning around and breaking a key level on volume like this. I just don't see it. I think this is just a weak bounce. I don't think that this is going anywhere. Look at the Nasdaq, same thing. Matter of fact, look at this. This just happened. Look at Netflix. Netflix just crashed another something like 25%. All right, after the close. I mean, how do you? Trust me, guys. This is nothing to worry about. I think that the broad markets have their time. Right, their time is coming. This low volume and fairly weak action. I'm not a believer. I think that they're playing chicken with the Fed. I think they're daring the Fed to take action here as we approach this critical level. I'm not a believer. I think we're on track to get exactly what we've been talking about. So how do you play it? All right, easy peasy. Let's go straight to something like uranium fuels. All right, we are about 5% away from the 50 on the daily. Okay, and below that, notice this ascending support here. This is forming a bit of a bearish kind of flat pattern here. This is an ascending wedge a bit. It could change, it could evolve, but this doesn't look good anyway. I think what you're looking for in the immediate future is, in the example of energy fuels, look what's happened in the past. All right, we get these strong wicks when we come down and touch this level. If you get a close on it, okay, and if you don't really bounce and get that wick, then I would start to worry that we would break lower. And from there, you will look for the 200, if not vertical support. So, excuse me, horizontal support. So let's see what we can find. Horizontal support somewhere, maybe right here. Well, that's right about the 50 anyway. Okay, so, or excuse me, the 200. So you break here, I would be looking in here. And obviously, you're going to try to find confluence across the board. So next gen is kind of putting in that same pattern. I think it's likely we break. That's your first test at that 50. Also another 5% down. You see how this is all kind of starting to add up together, right? You break that, then again, you look for the 200. You look for the sloping support trend, all right? Which takes us right back to Sprott Physical. We've been talking about this 50 on the daily ever since here, right? Came down, said don't sell, buy, came up and said, wait, we'll probably touch the 50 again. And you got to give this stuff time, folks, right? I mean, we've been talking about it for a while. Now it's finally happening, okay? Sometimes you just got to be patient, and patience is rewarded most of the time. You just have to understand that, things don't go up in a straight line, and when they do, people get scared, right? Because the price is going up too fast, and then they sell anyway. That's why parabolas are the way they are, right? And so it's good to come back and touch this 50. This gives everybody a sense of confidence that, they're buying at a moving average, right? They're not buying too expensive or even too cheap. It's a fair price, right? And this gives everybody a chance to reset and cool down. This is what you're looking for. Will we hit it? Maybe not, right? Maybe you come just a hair off of it, right? But you can look for this confluence with other things, right? Look for confluence in other things. Like, we might only test this breakout zone here, right? Or we might come down to the 50 on here. What's our distance? Okay, that's another 5%. So yeah, that's your first level on Uranium. Makes sense. And then if you break that, you're looking for further downside. And that's when you start charting your horizontal supports, right? And then you're looking for moving average. So again, the next one I see here, horizontal support's about $75, and that coincides with the 200 on the daily, just like we saw on the other one, right? So I'm already seeing confluence. So you're essentially getting buy number one and then buy number two. You know, buy number one, buy number two. Okay. But you don't buy here arbitrarily. Wait to see the price action. Do you get a wick, right? Do you get strong buying here, or do you close on it, right? Red down, or do you close below it? I think if you break this, you should look for further downside, okay? So we're getting the sell-off we anticipated. It's just a matter of how deep the sell-off goes. So we're at the point now where we want to foresee our buying zones in the future and simply let the price action tell us what the odds are of getting there. In the case of something like silver, we'll just use AG as the example across the board. You'll see we came down to this 50 right here and stopped on it. Okay. Well, just a bit below we have the 200. That's at 1260. If you switch to the weekly time frame, notice how the 50 there is at 1264. Okay, so it's essentially the same place. So what does that tell you? What do you get when you see that? Well, you should see that at about this 1260, 1270 level, you have confluence of support three ways. Not only do you have the support of the 50 on the weekly, you also have this trend line, okay, this sloping trend, and then you also get the 200 on the daily at the same time, okay, at the same price. That is the triple confluence of support. I think that if you don't have any AG, you buy AG there, okay? You take at least a 50% position, and you see how we react. But when you get confluence that strong, you pretty much have to buy when you get the opportunity, okay? And then you save that other 50% and see, you know, an anticipation of any further weakness. But that would be a strong buy right there. And the reason I'm showing you this is I'm just showing you more examples of confluence and support, things you can be looking forward to and looking at for buying opportunities, right? Because not everything's going to react the same way. Not everything's going to move in the same percentage. Okay, so you chart the sector to find sector-wide confluence, but you also chart things individually to find their own little special place, right? So just chart, and after a while, this stuff's going to start making sense to you, and you will find this confluence. But we're going to be doing it together, so don't worry. So in a nutshell, I think we don't do anything yet. Let's just keep watching. I think we likely still have a bit more downside to go. I think we're at the beginning of what we've been waiting for. I think you will be rewarded for holding your cash. I think you know, this is going to pan out for us. I did make an entry into SV today. I got in at 1048. We will see how that goes. I put in a half position to see if we come down here to the 200. Okay. So just to let you know that. And I did put in a small position on Global Atomic, because you'll notice that other things are threatening to come down and touch their 50 or their trend, but Global has been riding its trend, right? So first of all, that tells you any further downside will be at a different level, right? Where Next Gen and Energy Fuels had about 5% to go to get to their 50. Well, Global Atomic has about 5% to go to get to its upward sloping trend, right? So that's just another example of confluence, okay, just as an example. But not everything's going to be a buy at the 50. Not everything's going to be a buy at the 200. Not everything's going to be a buy at the sloping trend. Some things will be a buy at, you know, a horizontal support, you know. Look for that kind of stuff too. But just keep charting and find that confluence. That's all you got to do. It's happening. Be patient. Wait for the downside. Wait for the signal. You know, we'll be doing it together, but I think it's on the way. I wouldn't worry about the broad market not selling off yet. I think that's inevitable, and that's on the way. So hang tight, guys. Buying opportunity is coming, and what that means is that the next leg up is imminent. Believe me, this stuff, you know, we'll probably touch the 50 on gold, and actually these charts are better. Yeah, I mean, probably retest here on silver, if not the 50. You know, we've been talking about the 50 on gold forever. I mean, we keep coming and touching it. Why not touch it again? It's not a big deal. It's good. Now you get an opportunity to buy all these things at lower prices, right? And so just chill out. Don't sell anything. Hold your cash. Eyeball the targets. The deeper it goes, the more you spend.